Hi, Dennis Coral with Coral Wealth Management on another episode of Wealth Beyond Numbers. We continue with Chris Colston. Chris, thank you for continuing to be here. And I want to talk about more about the myths on credit. You know, people have different thoughts about credit so I want to uncover some of those truths and say if they're really real or not. And one of the questions that I asked prior to the episode as I was getting prepared, I asked our community if they had questions for you. So I'm going to just read up some of them, and you can maybe uncover some of them. Is it true that closing an account hurts your credit score? A credit card or a loan, or paying off a loan?
So closing off a credit card can hurt your credit. Because if you close the wrong credit card, that's where your credit card hurts. What I mean by that, Dennis, let's say if that credit card that you're closing is your oldest credit card. It's a credit card you got when you got out of high school, when you got into college. Mm-hmm. You've had it for 30 years now. Okay. You closed your oldest friend. You're telling your oldest friend, I don't want to be friends with you anymore.
Okay.
So now you don't have that longevity of friendship. So that will hurt your credit. Also,
even if that credit score, the credit limit was low, and that's why you closed it?
Yes, because it still is the oldest credit card. You need to always keep the oldest credit card. And if it has a low credit limit, call and see if you could get a credit limit increase. Sometimes they won't give you one because it's a very, very basic credit card, right? So it doesn't have a lot of movement. So what I tell people there, put something per month that is easy to remember and pay. Your Netflix, your Amazon Prime, something that's $15, $20.
People have so
and
many
then you pay it off. Yeah, and then you pay it off. That can be an automatic bill pay, and you won't feel it. But that relationship is still open. That particular relationship, not the institution relationship, that particular relationship with that account. So you do not want to close your oldest credit card. Also, Dennis, you do not want to close the credit card with the highest credit limit.
Why?
Because then you lose the muscles.
I see.
Then you lose the muscles. Then you lose now the debt to credit ratio. Remember how we were having that conversation before? Now your credit ratio now is lowering. So if you close out that credit card, you say, Chris, I never use this credit card. It's $20,000. I never use it. If you close that, now you have minus $20,000 available. So now your muscles just diminished. Your firepower diminished. But going back to what we said, if you have more than 5 credit cards, Dennis, it is very wise to close off credit cards. You just have to know which one to do it and how to do it. I just have a client right now that she's a physician. Makes crazy amount of money. Very smart. You know, she's preparing right now to purchase a home. You know, and as a mortgage advisor as well, I'm just trying to set her up for that. I looked at her credit. She had 30 credit cards open.
Wow. 30 credit cards. That's a lot.
Every single department store, Dennis. She had one. So the more credit cards that you get, Dennis, what happens? The lower the credit limit they're giving you each time. Because now they're like, why does Danny want another one? Oh, if he does, okay, but I'm going to give him something little. Give him something smaller. So now you get from having a $30,000 credit card limit, Dennis, to opening up a credit card with $1,000, $500 credit limit. You're like, what did I just do?
It doesn't go far nowadays.
Well, it also looks bad on your credit. The algorithm, when it picks up,
I see.
Now it sees all these people, and it reads that they're only trusting you for $500. What's going on with Dennis? When Dennis was top tier, now Dennis is bottom tier.
I see. So these are things that people don't do, but without realizing that it actually hurts their credit.
Yeah. So you need to really understand where your credit stands, understand the age of credit. So always stay with the oldest credit card, and always stay with the credit card with the highest credit limit.
So even though they entice you with, you get a 10% discount on the purchase, 20% discount on your purchase, it doesn't make sense credit-wise because it hurts it.
So if you don't pay that off, whatever you purchase, and you got that discount, if you don't pay it off, you're paying 29% interest.
Wow.
So
That's
now
a
you're
lot.
so
It didn't make any sense.
It didn't make sense.
Not
They
financially.
just tricked you.
Yeah, good. Let me read you another question from our audience. It's a myth. I mean, it's my credit report only matters if you're applying for a loan.
No, that's busted. A lot of employers are checking credit. A lot. You said it at the beginning. You as a financial advisor, you need to have a strong credit report.
Yes.
Me as a mortgage advisor, I need to have a high credit score. Like to apply for the license, you need to submit your credit. To go to the police force, they check your credit. To go anywhere, bank, they check your credit.
That is true.
Because they don't want to have someone that's in distress with access to money or access to information. Right now, we had a client that just called us, young kid, 22 years old. He just got denied to the Coast Guard
Oh, why?
because his credit.
Wow.
And he had 2 utility. And it's hit his credit score.
Wow.
And a lot of these individuals, Dennis, they're not doing what they used to do before. Like probably when we were growing up, our parents, that they will sit down, they get to know the person, get to know the family. Now they just look at you as a number. The AI bot is just looking at you as a number. They don't know Dennis, they don't know Chris. So they're making a decision based upon that. So you need to have great credit for everything, not just for loans.
Wow. Especially for our clients that have their kids and now they're off to college. Now they're starting to enter the job workforce. That's a trend that I've also seen, that now you don't just look good on your resume and your professional experience, but also on the application process, people look at your credit. And in financial services, I can tell you from experience, having worked for Morgan Stanley and SunTrust in the past, that one of the requirements was that you have good credit. If you didn't have good credit or your credit was not up to par, it didn't matter if your manager loved you or he really liked you, you just wouldn't get the job.
Yep.
You wouldn't.
Because they're trying to protect themselves, Dennis.
Of course.
For liabilities purposes.
Yeah, makes sense. Awesome. Great. Another question. So I know that you do credit repair. You've been doing this for 25 years. Some people think that credit repair companies are shady and all disputes are scams. Is that true?
No, it's not true, but I can understand why they feel like that. A lot of companies that they're in the credit repair, credit advisory service, and this is why we say we're not a credit repair company, we're a credit advisory on it. We take our time on selecting the right client, Dennis. For us, it's not everyone that calls us we say yes to. I want to listen to your story. I want to listen to what you want to achieve, right? Because like we said, people are reactive, not proactive, right? So usually people are calling us because somebody said no to them or it's going to cost them more money. And then I need to see if we can actually get the job done within that time frame. And then if I feel good about it and I feel good about the person, then I make a business proposition. Or a lot of companies that do the credit repair, they get into trouble, right? Or they get into this, is that they say yes to everyone. They make it very easy, Dennis, to sign up with them. It's a very low down payment, to get with them. And then they bill you per month. It's almost like a gym membership program.
Okay.
And what happens with gym membership programs? Only very few actually go to the gym religiously. Most of the people, they just have it like subscriptions, like you said before. So they make a whole lot of money and they're not doing anything for the client. Then the client realizes, man, I've been paying for 2-3 years and nothing's happening. Yeah, you weren't doing their part, they weren't doing their part. So I can see where they will get that thought. And a lot of them don't do a good job, Dennis. But the difference with us is we identify the client and we need to see if we're going to be good for them and the clients are going to be good for us.
I see. On that topic, I've seen commercials where people say, did you owe more than $30,000 in debt? We help you consolidate or eliminate the debt. Is that real or are those scams?
So that is real. That is real. But you see how you said the number? You said 30,000, 20,000. Because for them, they will charge you 20 to 30% of what you owe as their fee.
Oh, wow.
As their fee. And then the negotiation part is going to be 50% of what you owe to that company. So let's say you owe a company $10,000. So they're going to negotiate it to 50%. So you're saying, oh my God, what a great deal. Half of it. So I'm going to pay $5,000. But now you have to pay them the fee of that $10,000.
The $1,000.
And that could be $2,000 or $3,000 in this example.
Oh, wow.
So now you're repaying $8,000 right in the high part. You save $2,000.
Wow.
And your credit got all messed up because now they're advising you that you need to stop making payments. And when you stop making payments, now you have late payments on your report, Dennis. And now your credit score drops 60 to 100 points.
Wow.
So did they help you out? No.
No.
I never advise that consolidation. I would rather advise you to do a bankruptcy
Really?
than to do that consolidation.
Wow. Speaking of that, we have sometimes business owners, clients that for whatever reason, they have no choice but to consider bankruptcy. Mm-hmm. Can they rebuild credit of bankruptcy?
Yes.
Can someone rebuild their credit after going bankrupt?
Yes. I could actually help them rebuild the credit after bankruptcy. There's a couple of institutions, banking institutions that I'm partners with that will give you loans, that will give you credit cards after bankruptcy. But it all depends on the character of the client, right? The situation. Why did they go into bankruptcy? And then we could start rehabbing you and bringing you back up.
Does it take many years to recover from bankruptcy?
I would say 2-3 years.
Okay.
2-3 years.
Oh, okay.
2-3 years.
I thought it used to be 7.
No. So your credit for 7 years.
Oh, that's good to know.
Yeah. So 7 years, anything that is negative or derogatory, that meaning late payments, charge-off, collections, repossessions, that stays for 7 years on the report. Bankruptcy is 10 years on the report, it stays there. But can you reestablish credit after bankruptcy? Yes, you can.
Yeah. That leads actually to the question I had from one of our audience, which is, are bad credit permanent? So I think you answer it. So anything that you happen in your credit that negatively affected your credit score would stay on it for 7 years. 7
years, not from when you open the account, Dennis.
Oh, okay. Explain that.
So a lot of people will say, oh, I opened the account in 2000 during COVID.
Mm-hmm.
So I got 2 more years left and then I'm done with it, right? Because 7 years. No. It's 7 years from the last time they reported you negatively. Not from the last time that you missed a payment, Dennis. You could have missed a payment 2 years ago. But they're continuing to report you late. It's 7 years from when they stop reporting you. About to expire, right? And you haven't paid them back, they haven't gotten any money, they will sell it to a collection company. So now they transfer that debt to someone else and the clock starts all over again.
Oh, wow.
So if you're not proactive with bettering your credit, you're going to have bad credit for a very long time. You could actually go to court. They could actually summons you to court. If you don't go to court, they could garnish your wages.
Wow.
It could be a very, very long, slippery slope.
Wow. Speaking on the topic of MITs, does the government have any control on this in the area of credit or how to set guidelines for financial institutions or max limits on how much a credit card can charge a client?
They do. So before it was a wild, wild west. They can charge 100% interest. Before. Yep. So yeah, they have come down to the guidelines. They actually step in for just, abuse of client, client abuse.
Okay.
Predatory lending. That's huge.
Okay.
Predatory lending is huge. So they really clamp down on that.
In what way? Or how have you seen that?
So they put the maximum amount that they can charge you, in fees or interest rates. They also will ensure that minorities get loans the right way, right? Not in the predatory way, just because they're minorities. Yeah, there's a lot of lending guidelines now. Before 2008, 2009, it was just wild west.
Wow.
Yeah. So now they're getting better, Dennis, but the education part of it is still
Missing.
not even started.
Yeah, I agree. One thing I do remember post 2008 financial crisis, because we've been doing this for too long, so we're seeing a lot.
We're already saying years.
Yes, we're not mentioning years. Was that now credit cards do show you how long it will take you to repay the debt?
Yeah, I like that.
At the rate of interest that you have, and
how much you're gonna pay
in interest.
Yeah, in interest. Yeah. That was forced.
Yes,
that was forced by the government.
That's right.
Because before it was hidden.
Correct.
Before you did not know anything. They wanted to keep you in the dark.
That's right. That's right. And even the interest rate, they would move it to the end of the statement.
Yeah.
So you wouldn't see that. You would just see in the first page how much you owe and how much you had to pay. And then it was all buried somewhere in the second or third page, how much interest you were charged. And the moment I started showing that to clients, it was a big eye-opening for them to see, oh, wow, I'm paying so much. Yes, let's pay this off, Dennis.
The game is meant for us to fail.
Okay.
This is designed for us to fail.
So it's about learning how to play the game and the systems to better off your credit score, to look strength financially, to help you also build your business credit. So you're sharing so much information.
To build wealth.
To build wealth. At the end of the day, it's
and
wealth.
Peace.
And peace of mind. Yeah, that's what we try to do at Core Wealth Management. Provide information that empowers our clients to make better decisions with their money. This has been amazing, Chris. Our next episode, I really want to learn more about Chris Colston. I know you're a good friend, you're done what you do for 25 years, but I like our audience to know more about you and how you help your clients. So with that, we're going to end our episode. Thank you so much. Stay here, please. Don't go anywhere. One more. We have two more, and then we're off. This has been a great episode with Chris Colston. I'm your host, of Wealth Beyond Numbers, Dennis Corll, a wealth advisor and retirement planning expert at Core Wealth Management. And as we like to say at Core Wealth Management, retirement and financial confidence starts here. Thanks for watching. I hope you enjoyed it. Thanks.